Hey everybody, I'm Jonna and welcome to Trading with Master Jack. In this video we're going to be dealing with the currency strength meter part 2 of 2. Now just a quick recap. From the first video you'll recall our simple design that we used for our currency strength meter. We created a list of major currency pairs and we converted the currency pairs to the common currency base, which was the US dollar, those that were not, and then we calculated the rate of change for each pair over the last 15 weeks. And then we ranked the results from strongest to weakest, and then lastly we decided on pairs to analyze using your trading plan. Well, in my case, my trading plan. Your trading plan may vary depending on your risk tolerance and strategies that you apply, as long as you're working from a trading plan. And now we're going to be looking at the results. We had 8 possibilities last time, and as you can see I actually had wins in basically all of them. There's just this possibility number 2, I had a lose and a win. I'll explain that one when we get to it, and over here as well, and no entry on the 4th possibility. Now just to mention the parameters that I used based off my trading plan. I used the risk reward ratio of 1 to 1.5. Normally I use 1 to 2, but for the sake of the video I used this ratio. Each trade size was $200, and then therefore the max allowed losses per trade was $48, which is 24% of my trade size. That is actually overall 2% risk of my total portfolio. And if you're not sure on how to calculate these or where I got these percentages, you must have a watch. Definitely watch my what is a trading plan part 2, where we deal with entry and exit positions. And there we go into detail as to how to manage your risk. There is various ways, and I use a 2% of my total portfolio that I normally risk on a trade. And of course this is based off my trading plan. Now to possibility number 1. You'll recall the analysis from the currency strength meter part 1. I'm going to go over the analysis again. You'll see that's where we would have entered. I'm going to have an orange solid line here to show you on the next chart, which would be the later one. There's the orange line which showed where we entered last time. The position had entered, the price action had entered here. I had entered into my position over there. You can actually see that there was a price rejection and the formation of the shooting star. So I entered my position, went up a little bit, could have actually entered there, but I ended up entering a little bit earlier as soon as it came to the area of value, and it took profit automatically down there. And that was my winning trade for the first one. Now to our second possibility, our second trade that I had. It was the euro and the Canadian dollar, which was a lose and a win. There's our analysis from the currency strength meter part 1. I was hoping to enter into my position over here, going short against the dynamic resistance. And this also had an indication that it was still going to be going down before it went up. And then we can see what actually happened. As you can see, it immediately went up and had price rejection there, which is actually at the point where I entered the position, assuming this was the area of resistance and that this was the rejection of price that I was looking for, which should have been here technically, but you know the markets don't do what we want naturally. So then I had entered short over there, and then my stop loss was hit just around that area very soon after entering, and then my position closed as a loss. But then I carried on a few days later. When I re-looked at the price, I had entered over here on the hourly chart again, going by the resistance overall here, and I entered my position short, and it closed automatically down there, taking my profit based off my ratio. So technically I gained gained what I had lost based off my risk to reward ratio, with just a little bit of extra profit from that trade. But it also goes to show that things don't always go your way. If there's a break in the trend line, technically one should wait for it to come back and see what is going to happen with the price if you were to buy into it, coming back into it. So this would have technically been more of a buy position, but on top here, and then it would have actually, with a bit of a wider stop loss going down to here, is what one would have done in this particular case, taking profits towards this upside there. But this did look to be more of a range type of situation, as you can see. So messing around with it in the middle is a bit dangerous and risky, and it's best to look at better entry positions in the bigger picture overall. Now for the third one, which was the Australian dollar and Canadian dollar, which was a winning trade. This is the analysis from part 1 video. There were actually two positions that one could have taken. It was more of an upward trending range here. The best position would have been the buy position, as it would have been going with this slight trend that was in place. So let's have a look at what actually happened. And there was the buy position that one could have taken at rejection of the price here, going into support, and it was going upward. This could have been a good buy-in, and on top there was the sell position. This would have been an ideal one to have carried on for a bit more, because it would be going with the trend generally above the 200 moving average. But I took the sell short position over here, as I was on at that time, and I took this position when there was rejection of the price, and I entered in on the hourly chart. And then the price actually moved downward, and then it closed automatically, taking profit, which you can see was actually a very tight one. It was quite a bit of a lucky one actually. Could have easily not have gone down there, as it had carried on upward, and that's why it is actually better to have taken a buying position in this particular trade. But at least this worked out into my favor. Now to the fourth trade, which was the euro and the pound, and there was no entry. As you can recall from the first video, I was hoping that the price would have been rejected there, coming down into support, and then I would have had my buy in. But it doesn't always work that way, and as you can see, what really happened over here, the price had only gone as far as this area along this 14 moving average, which 20 moving average would have also confirmed this quite nicely, and that was the deepest pullback overall, as you can see with the stochastic. So this would have been the ideal entry point over here actually. So I had no entry there, but I was also not paying enough attention to this particular chart, as I was waiting for the price to pull back. Now on to the fifth possibility, which was a winning trade. That is the US dollar and the Swiss franc. And there we have it. From our analysis in the first video, it was technically already an area of value alongside here, but I was waiting for the rejection price here, or moving into the area of value with the rejection of price, and then it would have continued down. And the actual result, as you can see, it did have rejection of price there and had continued in its downward direction. My entry was actually just over there, over on this rejection of the price, and I went in my short position and took profit around about there. Now to number 6, which was the pound and Canadian dollar, which was both a losing and winning trade. This was the original analysis. We were hoping to go short at that position, at that resistance, but there was also the possibility that it could move further back. If there was not a clear sign of rejection of the price here, then it could move further, a further pullback to there before continuing downward. And this is actually what happened. There it was. I had actually taken my position here on the hourly chart, and the ended up not working out. My stop loss got triggered on top there. I'll show you now on the 1 hour chart why I had taken a position there. And then when my position didn't work out, I then took my position again here when I saw the rejection of price occurring at the resistance here, and decided stop loss above there would work out quite alright. So then I took my position and later on took profit over there automatically, and that's why it was both a losing and winning trade. But here it is on the hourly, and that's why I took that position there initially, was because there was the shooting star there, and it looked like it was going strongly into my favor, but then it had reversed and my stop loss got hit, and that's why I retook my position short. Now on to possibility number 7, which was the Japanese yen and New Zealand dollar, which was a winning trade. And as you can see on the New Zealand and Japanese yen pair, this was the analysis, just expecting the price to go upward into there, and I would have taken it short. Now technically, once again, above a 200 moving average, you would actually consider a buy-in preferably, but because on the weekly trend it was on a downward trend, I was looking more for selling positions. that's really up to how you analyze the charts and how you feel at that point where the price action could be going. And this is actually what happened. We went on to the hourly chart. This is where the chart had entered on the 4-hour. The price had gone there. Could have done a great buy-in for a strong move upward with great gains, but I ended up taking my short position on top here at the price rejection just over there with a shooting star, and the price automatically closed there. Technically one can always have taken more profit. There's always that possibility, especially with this tweezer top confirmation showing that there's more bearish direction to come, and this would have been a great entry had one continued holding it, but I had it set on automatic profit take based off my risk reward ratio. Now for the last one, which was the Australian dollar and euro, the last winning position. This was the analysis originally, waiting for the price to have come into this area of resistance and looking for an entry position over there. And what had really happened, because I expected that because of the low momentum there would be a strong drive downward, and this is what really had happened on this chart. As you can see there, the price had gone into this area and I had made my entry just there at this rejection point, and I had gone short. As you can see, it was a bit of a tighter entry as the leverage was much higher, and I had taken my entry there at the rejection price, and the profit had been taken over there. I obviously had a much higher leverage that I used there. One can really have held it for longer to have made much more gains. Now to conclude with the results, these were all the trades that were winning trades, and then we had our losing trades there. This one we had taken twice, as well as this one. That's how there was the losing and the winning trade. My total gains were $504 and the losses were $96 with a realized gain of $408. And this gives me a winning rate overall of 77.7% based off 9 trades, which was 7 wins and 2 losing trades. Now, does this mean that the currency strength meter will always let me have the best pairs to get such a high win rate? No, it doesn't necessarily mean that. One always has to take into account the bigger picture and where the price action is going, and that proper due diligence needs to be done with good technical analysis overall. This was my best 10-day period. Normally my win rate is lower, around 55 to 60%, but this overall is just a guideline. It's a tool just to show which pairs has the most potential. Ultimately, good technical analysis must still be applied based off a trading plan, that you have developed and that you feel confident in. Just because a particular currency is the strongest or the weakest, it does not necessarily mean that it will continue in that trend, because it could be at its turning point at that point, because if you take in consideration it's only a 15-week period that this is based on, and it could be turning or reversing at that point. So it's good to take into consideration the bigger picture, especially when within that time period, if it is in a downtrend or an uptrend, whatever it may be, that it could have come to an end and it could be turning or changing its direction. So keep that into consideration when doing your technical analysis and work off your trading plan. If you enjoyed this video, hit that like and subscribe button so that you don't miss out. Happy trading, and may the trend be with you.